Have you ever wondered how some American investors get money deposited into their accounts every single month, without taking crazy risks or just counting on luck? Imagine having real security and financial predictability, getting paid in dollars, no matter what's happening with the economy. Today, I'm going to reveal the 6 stocks that deliver exactly that: a reliable monthly cash flow, built around names like Realty Income, Main Street Capital, LTC Properties, EPR, Dynex Capital, and Fortitude Gold. How many of these are already in your portfolio? And what if, starting right now, you could build or update your investments to guarantee true passive income, month after month? Come with me as we discover what these assets are, learn in simple terms how monthly dividends work, and most importantly, see the exact strategies regular Americans use to reach financial independence without complication. By the end, you'll know exactly how to stop doubting, break through uncertainty, and transform your wealth, practically, accessibly, and with no fluff. Stick around till the end, because these tips could change your cash flow forever. Let's start by busting a myth that holds a lot of people back. Passive income is not just for millionaires, Wall Street experts, or those in on secret tricks. In fact, with just a little money and discipline, you can build an automatic monthly payment machine, even starting from zero. There's a misconception that you only get regular dividends by investing huge amounts. But the truth is, the U.S. market structure is uniquely accessible. Platforms like Robinhood, Fidelity, and M1 Finance let you buy fractional shares, schedule automatic investments, and even reinvest every single penny you earn. There are people who started with just $50 or $100 in monthly dividend stocks, and today they watch money come in each month, without ever needing to sell anything to pay their bills. The key isn't how much you invest at the start, but how consistent you are with the right assets and contributions. And the examples you'll see in a minute prove this. Drop a comment below. Do you think it's really possible to achieve meaningful passive income starting small? Your story might inspire other investors to take that first step. But what exactly are monthly dividends? And why have they become a hot trend among Americans looking for stability and financial peace of mind? Dividends, simply put, are portions of company profits paid periodically to shareholders, a share in the profit, but without having to work for the company. In the U.S. market, most stocks pay dividends quarterly or semi-annually, but there's a select group specializing in monthly payments. These are the monthly dividend stocks. The difference is huge. With dividends hitting your account every month, you can budget as if you're getting an extra paycheck. No need to trade time for money. To see how this works, just look at the company's payment calendars. Each one sets its record date and payment date, and if you own the shares at the right time, the dividend lands directly in your account. No red tape. Now imagine charting your cash flow over the year, adding together your salary, your investment returns, and every month, the boost from dividends. It makes planning trips, upgrading your car, or simply securing your finances so much easier. Just think how your year could look with that kind of predictability, knowing there's a fresh inflow of money every month, no matter how the market's doing. So how do you pick the right stocks to guarantee solid monthly payments and avoid traps? There are a few fundamental things to look at. First is payment history. Stable companies usually have years, sometimes decades, of uninterrupted dividend distributions, showing respect for their shareholders. Another is the sector the company belongs to. Those tied to real estate, REITs, credit, essential services, or even precious metals generally have more stable cash flows, even during tough times. Financial health is also crucial. Check the company's balance sheets, debts, and how much profit is dedicated to dividends, which can reveal risks or signal possible cuts. And finally, look for dividend growth. Companies that gradually increase payouts show real commitment to shareholders and potential for your investment to grow. That's why the selection I'll show you isn't random. Each of these 6 stocks stands out for its security, reliability, and regularity. And if you're liking these tips so far, smash that like button so I know I'm adding value. Now let's get to the heart of this video. Let's dive deep into each of the 6 stocks American investors love for never-miss monthly dividends. First up is the legendary Realty Income, known in the market as the monthly dividend company. Realty Income is a powerhouse REIT, real estate investment trust, focused on leasing out commercial properties all over the U.S. Its edge comes from a diverse portfolio that includes everything from healthcare providers to big-name stores like Walgreens and Walmart. Since the 1990s, the company has maintained a flawless record. It's raised dividends more than 100 times and has never missed a payment, even during crises. For many Americans, Realty Income is a symbol of personal retirement. They invest, and it's like guaranteeing a private pension, with monthly income that can be reinvested to grow over the years. Anyone who put $1,000 in 10 years ago, aside from share price appreciation, has already received hundreds in dividends, reinvesting and accelerating their wealth even more. If you care about safety and regularity, Realty Income is almost a unanimous choice for monthly payers. Next, Main Street Capital Maine is a perfect example of the power of business development companies, BDCs. In the U.S., Maine's role is to invest in small and mid-sized businesses, often providing funding for innovative companies that can't get big bank loans. With over 15 years of monthly dividend history and regular increases, Maine made it through the 2008 crash, the 2020 pandemic, and never stopped paying shareholders. Many Americans use Maine to boost retirement income, combining high yields with portfolio protection from sector instability. The big advantage is diversification. Maine invests in dozens of different businesses, so a crisis hitting one area won't tank your income. Plus, the automated investing and reinvestment features found at many brokerages supercharge the compound effect. At the end of the month, it's common to see posts online celebrating Maine payouts and the magic of reinvesting automatically. Now, LTC Properties, LTC, is a REIT focused on healthcare real estate, mainly senior living homes and medical care facilities. With America's population getting older, this sector is one of the most resilient for the long term, since there's always demand for quality healthcare and senior housing. LTC has a solid track record of monthly payments, showing strength even through economic storms like the pandemic. For anyone planning for future stability, it's a solid option. Its portfolio is spread across different states, shielding you from regional risks. Investing in LTC doesn't just mean monthly dividends. It's a play on America's demographic growth and the ongoing appreciation of real estate assets. It's a great pick for those looking for resilience and safety, with a touch of healthcare innovation. EPR Properties, EPR, shines in the world of real estate for entertainment, education, and leisure. These are properties like movie theaters, theme parks, private schools, and resorts, sectors that held strong and bounced back quickly post-pandemic. EPR's biggest asset is diversified tenants, dozens of long contracts that guarantee cash flow consistency, which of course means stable monthly dividends for shareholders. EPR is a favorite for investors wanting to branch out from traditional sectors and capture growth driven by new American consumer habits. With a boom in domestic tourism and entertainment, EPR is well-positioned and has delivered uninterrupted dividends for years. You can easily use app-based comparison tools to see how EPR's cash flow holds up in different market scenarios. By the way, do any of these sectors stand out for you? Let me know in the comments. Dynex Capital, DX, brings mortgage and real estate credit to the table, another classic for monthly payments. Dynex operates in a specialized niche, handling mortgage-backed securities insured by the U.S. government, plus other fixed-income assets that make its revenue even more predictable. While price swings happen, especially in this sector, DX keeps monthly payouts to shareholders going strong. If you're into building passive income by mixing sectors, consider pairing DX with classic REITs and BDCs for stronger results, especially when the real estate and credit markets hit rough patches. Smart investors keep up with quarterly reports to spot any policy shifts early and avoid risks. Don't forget to interact, like, share, and let me know which of these assets you see as a complement to your own portfolio. Finally, Fortitude Gold, FTCO, is the least obvious on this list, but maybe the most strategic for fighting inflation and market swings. FTCO is a gold mining company specializing in sustainable, aggressive monthly dividend payouts. Gold has always been seen as protection against dollar devaluation, and FTCO's unique approach is combining steady payouts with the potential upside of precious metals in uncertain times. For those building diversified portfolios, FTCO helps smooth out results, especially when traditional markets get rocky. The dividend's reliability comes from the company's cost control and operational efficiency. Over the long run, anyone holding FTCO finds a way to shield part of their wealth while still bringing in monthly cash. Now that you know the top monthly dividend stars, the how becomes just practical steps. Any American investor can buy shares in these companies through ultra-accessible apps like Robinhood, Fidelity, or M1 Finance. They allow you to schedule recurring purchases and, best of all, enable DRIP, dividend reinvestment plan, at no extra cost, so every dividend is automatically reinvested, speeding up your compounding returns. For a balanced portfolio, diversify across sectors: real estate, credit, healthcare, entertainment, and metals, according to your risk tolerance. Lots of professionals and small business owners pick one as a personal fixed income, reinvesting everything until they hit a goal, then withdrawing just what they need to supplement their salary or retirement. Let me ask, have you thought about automating your income like this to win back more free time and peace of mind? Tell me in the comments. Your insight might help others in this community. For those wondering if just taking your dividends out every month, instead of reinvesting, really pays off, this is a classic question. Let's analyze it together. Picture two investors. The first reinvests every single dividend from these 6 stocks over 10 years. The second takes the cash each month. Thanks to compounded growth, the reinvestor's wealth snowballs far faster, even if those monthly amounts feel smaller at first. On the flip side, the investor who cashes out gets that stable monthly flow, perfect if you're already at a point where you want to enjoy your earnings. And the charts make this clear. After 5, 10, or even 15 years, the reinvestors have built much more capital, while those who withdraw dividend payments enjoy immediate, flexible financial freedom. The secret is understanding what best matches your life goals. Are you looking to accelerate growth, or do you want to live off this newly built cash flow right now? Share your own experience or questions here in the comments. Your feedback can enrich this debate. Remember, nothing is perfect. Even the most solid stocks come with some risk. A company could face trouble and cut or lower its dividends during tough stretches. Stock prices can swing as the economy shifts. Certain sectors get hit harder in some phases. The key to staying safe is never putting all your money into just one stock or sector. Instead, lean on diversification, regular monitoring of your assets, and always keep an emergency fund set aside. All 6 picks highlighted in this video were chosen for their stability and reliability, but it's absolutely essential to keep up with each company's reports and news. Use tools and websites like Yahoo Finance and Seeking Alpha to stay on top of updates. Real passive income is built through balance, safety, and discipline. Ready to start today? Open an account with a U.S. brokerage, set up scheduled investments in these stocks, and activate DRIP, Dividend Reinvestment Plan, so all your returns are automatically put back to work. Track your monthly reports closely and rebalance your portfolio as you progress. If spreadsheets are your thing, or if you prefer using apps that simulate your wealth over years, most brokerages even offer tools to make this super simple. This makes managing your investments much easier and even a little fun. Everything you've seen here drives home one point: getting steady monthly payments in dollars, straight from the American stock market, is absolutely possible for any committed investor. It doesn't matter if you're starting small or already have a substantial portfolio. The real game changer is focusing on solid assets, diversifying wisely, and sticking with your biggest goals. I've laid out the right stock names, broken down the logic of monthly dividends, and shown you step by step how just about any American can walk this path to financial independence and peace of mind. Now it's your move. If you got value from this content, don't forget to like the video, share it with anyone else hungry to leave uncertainty and headaches in the past, and guarantee a predictable monthly income in dollars. Drop a comment. Tell me, which of these 6 stocks is already in your portfolio, or which one will you add first? Share your doubts, stories, or suggestions. I'll read and respond to every single comment. That way, you help me keep bringing the most practical, actionable investment content to our community. Remember, here, passive income isn't an empty promise. It's a step-by-step build, and you can get started right now.